This is Nightly Business Report with Bill Griffith and Sue Herrera.
Brexit delay. British lawmakers hit the pause button on leaving the EU. So what's next? 2020 vision. General Electric hits the reset button on 2019 and says it's all about next year. And navigating financial aid. Nearly all parents say aid is a determining factor on where their child goes to college. But what if the aid is still not enough? Those stories and more tonight on Nightly Business Report for this Thursday, March the 14th. And we do bid you a good evening, everybody, and welcome. Sue is off tonight. We begin tonight with the latest developments in the already complicated Brexit process in the UK. The House of Commons today voted overwhelmingly to ask for a 3-month extension to its departure from the European Union. But there is still much more work to be done before that can happen. Willem Marks has more for us tonight from London.
It was the third day of important votes in the House of Commons as the British government and Parliament sought to find a way through what has been a months-long political deadlock. On Wednesday night, lawmakers had sought to rule out the possibility the UK could leave the European Union without some kind of withdrawal deal. And tonight, as part of a logical next step to avoid that so-called no deal, the government offered Parliament an option to try and delay Brexit beyond its original March 29th deadline. A resounding majority of MPs seized that opportunity.
The ayes to the right, 412. The noes to the left, 202. So the ayes have it. The ayes have it. Unlocked.
But before that, MPs also voted against a second referendum and against an opportunity for the House of Commons itself, rather than the government, to take control of the Brexit process. All this now means that, in theory, Prime Minister Theresa May must next week travel to Brussels to request that her 27 European counterparts give Britain more time. But there's no guarantee those EU leaders will grant that extension, though few of them want to see Britain leave without a deal either, given the damaging economic consequences. May and her allies are hoping that they can use the threat of a much longer extension to persuade rebellious members of the Conservative Party to back her original deal. If that happens next week, it could only require a short technical extension, and the Europeans might be more than happy to oblige. May's third Brexit secretary in as many years, Stephen Barclay, used arcane parliamentary language to explain there would be more details by the morning. But these are uncharted waters for British leader and government, and her opponents and critics, like Jeremy Corbyn, know it.
Mr. Speaker, after the last few days of government chaos and some defeats, all of us now have the opportunity and the responsibility to work together to find a solution to the crisis facing this country, where the government has so dramatically failed to do so.
The question now is, will Parliament find an alternative to May's deal that would give the Europeans a good reason to extend beyond late June? For Nightly Business Report, I'm Willem Marks in London.
Back here on Wall Street, stocks were flat today as investors wrestled with news that trade talks between President Trump and his Chinese counterpart could be pushed back until next month. Add to that data showing that new home sales in January fell by nearly 7%. And stock gains were capped as a result today. The Dow rose just 7 points. The Nasdaq was down by 12, and the S&P gave back about 2. But as Bob Pisani tells us now, the market is in a critical time.
This is an important moment for the markets. We're finally breaching this 2,800 level in the S&P 500, and we have a shot at getting at the 2,820 level. You might recall this is the level where 5 rallies have failed in the last 6 months, and a break above 2,820 may drag in more investors. At least that's the hope of the bulls. Despite all the ongoing worries about Boeing, the volatility index, the VIX, often a gauge of fear on Wall Street, has dropped to its lowest levels of the year. Now, one thing might be helping. Friday is the quadruple witching day. That's the quarterly expiration of the futures and options. They're all expiring at the same time. So why is that important? There's been a historically slight upward bias in this particular week. The S&P has been up 24 times this week since 1983. It's been down just 12 times. But what will it take to really push the market higher? And I think the key is the global growth story here. We had solid data this week with the economic news on durable goods and producer prices, and that may help bulls argue that earnings may not actually turn negative for the first and second quarters. That's been a big worry, meaning no earnings recession in the cards. But to keep the rally going, we really need a lot more meat on the bones here. After the weak China industrial production numbers we saw overnight, we can expect a lot more stimulus out of China, that's for sure. But what traders need is more visibility. Facts that recently pointed out that companies with earnings outside the United States predominantly have much lower earnings expectations now than companies who rely primarily on earnings inside the United States. What does it mean? Well, it means that China and Europe need to stabilize to get better visibility on earnings for companies here in the United States. Brexit's another mess. The British pound's nearing a 2-year high, but what the street really wants for this whole thing, they want the deadline to be extended, and then they want another referendum that will result in the UK remaining in the EU. That's still a long shot, though. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And Treasury Secretary Steve Mnuchin today did confirm that the trade negotiations with China will not be wrapped up by the end of this month, as had been hoped for. And it turns out that while the protracted talks continue, our trade deficit with China has ballooned. Exports to China fell by 25% last year, while imports have skyrocketed. Jane Wells is at the Port of Los Angeles for us tonight.
You're looking at the largest ship ever to dock at a North American port, capable of holding 19,000 standard containers. It's a giant symbol of how out of whack trade is between the U.S. and China since the tariff war began last year.
With the more than 1.8 billion square feet of warehousing we have in Southern California, there's less than a 1% vacancy rate.
Here's why. Imports from China surged last year, up $34 billion from the year before, while exports of U.S. goods plunged $10 billion. So much traffic has been coming in from China as companies front load ahead of even more potential tariffs. It's been great for the ports, but it's gummed up the works.
Truckers are waiting longer. Railroads are spending a lot of money repositioning equipment. Cargo owners are carrying a lot of costs with the advance of inventories, and having all these imports come in and then sit. We've got thousands of containers of brake pads, keyboards just waiting.
The Institute of International Finance estimates that U.S. companies are losing $40 billion a year because of the tariffs, and the ripple effects extend far beyond China.
You guys have a good day.
For example, last month at the World Ag Expo in California, alfalfa farmer Brooks Beeling complained his hay from Utah couldn't get to Saudi Arabia.
We've had contracts signed in June and the hay still hasn't moved. You know, a lot of it's been paid for, but they're still sitting in the barns because the ship movement is pretty slow.
Another reason exports are down is because of China's new environmental policies, which have slashed Chinese demand for things like recyclable plastic and paper. Which brings us back to this huge ship. One reason it's here is to help clear the port of empty containers to make room for the next boatload of goods from China. For Nightly Business Report, Jane Wells at the Port of Los Angeles.
In other news, the number of Americans filing for first-time unemployment benefits rose to a 4-week high last week. And while claims remain near all-time lows, some analysts have been concerned that a recent rise could signal a cooling of the labor market. Remember, last Friday, the Labor Department said the economy created just 20,000 jobs last month. That was well below expectations. But one area that is hiring is autos. There are more cars on the road than ever, and drivers are hanging onto them longer than ever. That means skilled auto repair technicians are in demand. By one estimate, some 46,000 will be needed in the next few years. Kate Rogers takes a look from Hackensack, New Jersey.
Michael Gerhardt, Pep Boy's master auto technician, has been on the job for decades, constantly working to stay on top of advances in technology.
It definitely doesn't get boring. It's always changing, and as long as you can keep up with the technology that's out there and that you're given a chance to use, it can be a very rewarding career.
Finding qualified technicians is a challenge as workers age out of the industry and the pool of talent shrinks in the face of a tight labor market. There's also a focus on obtaining bachelor's degrees when those with trade skills are needed more than ever. A recent report from the Conference Board said a blue-collar worker shortage is expected to continue this year.
In the U.S., more than in most other advanced economies, the American dream is to go to a 4-year college and not have a manual job. So I think this is, for a while it was not a problem because there was no shortage, but now there is a big shortage, and people with a BA are just not interested in those jobs.
Icon Automotive, with brands like Pep Boys and Amco, is leading the charge to fill the skills gap, partnering with trade schools and offering apprenticeships.
As demand has grown, supply has not kept up, and a lot of that is driven by a lack of investment in schools and a de-emphasis on the technical programs really all the way back into the high school level. And then as the employee base ages out and retires, we're not filling that gap with, the latest technician pool.
But executives say this isn't the blue-collar work of days past, and they're trying to shed that old image.
I think there's a stigma around the type of work, and it's still this old, get your hands dirty, greasy job. Today's shop is really more of a house of technology where, we really think that, students today should be thinking about that role as really a STEM career.
With more drivers on the road and automotive innovations advancing, filling this gap is imperative. For Nightly Business Report, I'm Kate Rogers in Hackensack, New Jersey.
Time to take a look now at some of today's upgrades and downgrades. Cowen initiated coverage of Apple as an outperform. The rating was based largely on increasing contributions to earnings from Apple's services business. Price target now $220. Apple closed at $183.73 today. That was up 1%. BTIG is upgrading Snap to a buy from neutral. This is the analyst's first buy rating since Snap came public just 2 years ago. He cited Snapchat's move to more premium produced content. Price target is now $15. Snap got 12% closer to that today, gaining up to $11.28. Mizuho is initiating coverage of Microsoft with a buy rating. The firm sees the company's cloud businesses continuing to drive strong overall growth. Price target now $135. Microsoft rose nearly a dime to close at $114.59. Now that Boeing's fleet of MAX jets is grounded, airlines are scrambling to rebook flyers and keep routes open. And passengers are reacting and letting their feelings be known about that jet at the center of the whole controversy. Frank Holland is at New York's LaGuardia Airport for us tonight.
Boeing's 737 MAX jets are now grounded, but passengers like John DeSando are letting their theories fly about why airlines waited for a presidential order.
The profit motive is a powerful one, and I'm quite sure that they wanted to wait till the last minute, till somebody else made that decision. But when you think about it, you should shut it down immediately.
As cancellations and disruptions are experienced all around the country, passengers here at LaGuardia Airport in New York City are expressing a mix of concern, confusion, and even confidence.
I fly every day. I'm aware of it, but if it's American made, I'm going to fly it. I've flown Ilyushin 16s from the Soviet Union back in the 70s and 80s that rattled when they flew. If it's made by Boeing, I'm going to trust it.
United flight attendant Rachel Kay says passengers have asked a lot of questions about the new 737 MAXs, but the tone changed dramatically in the days after the fatal Ethiopian Airlines crash, before the jets were grounded.
A while ago when I was getting them, it was just curiosity, like, are we on the new 737 MAX? But now it's kind of turned to fear. People don't want to be on one of those. If they are on one of those, they want to switch their flights.
United, American, and Southwest were the only U.S. carriers flying the 737 MAXs. United does not fly the MAX 8, but it does use the slightly larger MAX 9. Both United and American say it will impact about 1% of their flights. Southwest says about 4%.
I think it's great that all of the MAX 8s are now grounded, and hopefully they're able to figure out what's been causing this so that no more lives are lost.
I really hope that they find the black boxes and get to the root of the problem. I mean, if they're going to keep sending the MAXs out, they should really know what they're sending out, what they're getting people into.
The black boxes from the Ethiopian Airlines flight have been recovered, but many questions remain. What caused this deadly crash? And are the 737 MAXs in the U.S. safe to fly again? For Nightly Business Report, Frank Holland in New York City.
Coming up, we'll show you what happened to real estate in one area when Amazon came calling. 1 week after telling investors that the company would have negative cash flow this year, General Electric today warned of lower profits and called 2019 a reset year. But the numbers may not have been as bad as Wall Street was fearing. Shares today rose almost 3%. Morgan Brennan has more.
GE's vision is 2020. This year, investors can expect lower profits and weak cash flow as the company continues to cut costs and debt. Cash is a key focus for the company and for investors trying to value the stock in the midst of this turnaround. GE expects industrial free cash flow to be down as much as $2 billion in 2019. But on a call with investors, Culp did sound hopeful about the long term.
If we get the returns that we can and should on restructuring, let alone the underlying operating improvements that we're making, we think we get cash flow back to positive territory in 20. We improve upon that in 21, and longer term are in a position where we think this portfolio should yield on a cash flow basis numbers far in excess of what we did last year.
Power continues to be the biggest pain point. Culp telling me, quote, we will have a greater level of negative cash flow in that business this year. It was negative in $2.7 billion last year, but that it will be worse this year, and from there it will get significantly better in 2020. And we expect positive free cash flow in 2021. GE says healthcare and renewables will face some pressure due to restructuring and other one-time costs, and that cash flow for aviation is likely to be flat as GE ramps production of its newest jet engine. Financial arm GE Capital will require more cash this year and likely next, but could stop losing money by 2021. To continue paying down debt, the company plans to gradually sell its stakes in 2 companies now home to former GE units, oilfield services firm Baker Hughes and the locomotive maker Wabtec. All of this means GE is forecasting adjusted earnings to decline in 2019. But the hard-hit industrial does expect growth to return as soon as next year. For Nightly Business Report, I'm Morgan Brennan at the New York Stock Exchange.
Oracle gets help from the cloud. That's where we begin tonight's market focus. After the bell tonight, the enterprise software company's results topped expectations, even though overall revenue fell by 1%. Oracle's cloud business, which is its largest segment, grew by about 1%, and the company increased its dividend by 26% to 24 cents a share. Shares were volatile in the extended hours tonight after losing a penny during the regular session to close at 53.05. That's just shy of an all-time high. Also after the bell tonight, software maker Adobe reported a 25% rise in quarterly revenue as its earnings did beat Wall Street expectations. The quarter was driven by growth in Adobe's digital media business. But the beat might not have been enough as shares initially fell in extended hours after closing the regular session up 1% to 267.69. And shares of tailored brands came undone after posting results that fell short of expectations. Last night, they reported the parent of Joseph A. Bank and Men's Warehouse gave weaker than expected current quarter guidance, saying that same-store sales had dropped during the fourth quarter and that the trend had continued in the early months of 2019. And shares lost a quarter of their value today, closing at $8.75. Facebook's data sharing deals are reportedly the subject of a criminal investigation now by federal prosecutors. The New York Times says a grand jury has subpoenaed records from at least 2 well-known makers of smartphones and other devices that reportedly had access to Facebook user data. Meanwhile, Facebook said today that it had resolved a widespread outage that affected its Facebook, Instagram, and WhatsApp platforms. The company said it was a technical issue, not an attack. Facebook lost nearly 2% in today's trade at 170.17. When Amazon announced its plans for a new headquarters in Northern Virginia last November, online searches for homes in that area spiked by 700%. That according to Trulia. And as Diana Olick tells us now, those searches are now turning into sales.
This tiny old home in Arlington, Virginia is about to go on the market for around $800,000.
Not surprising to you at all. No.
And investor Lisa Layden thinks it's a steal. Layden owns 4 rental homes in the area and would like to buy more, but competition is steep thanks to the Amazon effect on Northern Virginia.
They go quickly, like within 3 or 4 days, and they go for about 5% more than they would have 6 months ago.
Home sales in Arlington, where Amazon announced it's putting its new headquarters, jumped 28% annually in December, according to the Northern Virginia Association of Realtors. Speculators were already swarming the market even before the official announcement. Sales were up over 7% in January, but fell almost as much in February. Not for lack of demand, though.
We're in a market now where we just don't have as many houses to sell as we have buyers who want to buy them. And with Amazon coming, that's just getting worse. We're just so many people that want to invest, and we just don't have enough inventory for them.
Inventory is down more than 20% now compared with a year ago, and that is pushing prices in the area higher as well, up over 6% annually. Not only are home values going up, but rents are rising as well, and that has investors even hungrier to get in.
Perhaps I would have sold in 5 years. I think for me it's 10 years because of Amazon, and that would be their full hiring of the 10-year period.
Because the potential to profit will continue as long as new Amazon employees continue to move in. For Nightly Business Report, I'm Diana Olick in Arlington, Virginia.
Up next, it's time for your kid to decide which college to go to. But what if you don't have the money and the financial aid offered is not enough? Lost in all the clamor this week about the college admissions scandal, many students right now are receiving their college acceptance letters. So what happens if you get in, but you don't have the money to go? For many families, the financial aid offer from a school does become the deciding factor. And if it's not enough, what can you do? Our senior personal finance correspondent, Sharon Epperson, is here with some answers tonight. Can you actually negotiate for more money, and what's the likelihood you get it?
You can negotiate, and you should negotiate. Princeton Review came out with a study just in the last couple of weeks showing that 99% of the parents and the students that they surveyed said that financial aid would be the deciding factor. Right. And so if you're able to negotiate and have an appeal, then you need to take that opportunity, and you need to find out how best to do that with your particular school that you're going to, because in a third of the cases, you could get some more money.
Really? So how do you do that? What are the steps you should take?
Well, the first thing you need to do is make sure that you know what the school's process is. You don't want to just run up there and try to get to the financial aid office. You want to make sure that what the appeals process is. Gather all of the evidence that you can to support your case, why the financial aid package really doesn't meet the mark, and then also emphasize the commitment to the school. You're thankful to get an offer, you're grateful to be accepted and very seriously considering going, but you have a case that you need to state.
And what should you say in that case? I mean, any do's and don'ts on what to put in that letter?
One of the most powerful statements that you can make in that is that this does not accurately reflect my financial aid package because, and then explain what that because is. Justify that with specific reasons. Don't just ask for a specific number, because they want to see a breakdown of where the shortfall is, and you want to be able to explain that. You may actually get more than you anticipated without asking for that specific number. So don't try to box them into a corner there. And then also make sure that you keep it short to the point, but you want to have the evidence that you can to support your claim. For merit-based aid, make sure they know of all the awards that the student has gotten, perhaps since they made that application, so they can get the merit-based aid as well. So need-based, merit-based aid, know who to talk to, and make sure you make that appeal.
Got it. Paying attention, that's for sure.
All right.
Sharon Epperson,
Sounds
thank
good.
you as always tonight. Finally tonight, today is March 14th, otherwise known as Pi Day. Pi is a mathematical number that continues on infinitely without repeating. Well, just in time for today, a new record was set by calculating the number out to the 31.4 trillionth digit. That record was set by a Google employee, of course. That's Nightly Business Report for tonight. Thanks so much for watching. I want to remind you, this is the time of year when your public television station seeks your support, and we do thank you for your support. Have a great evening, everybody. We'll see you tomorrow.